This is the Financial Coconut Podcast, Singapore's first personal finance podcast network. My name is Rakesh, and together with Anthony, we discover worthy financial news and derive insights for all you coconuts. We are part time investors with an intense full time career. If we can do it, you can too. So join us every Thursday for TFC Weekly Market Updates. Hey coconuts, welcome back to Weekly Market Updates, where we scour the net to find worthy financial news for you. I'm back. It's not just Anthony. And we have three topics to talk to you about. Two of them pretty close to home, really. First one is C and their earnings. Next is Grab and their earnings. We've talked about these two before. Grab, we complained a bit. C, we have always been talking about it quarter in, quarter out. So it'll be good to see where they are. Are they moving towards profitability? How is their diversification coming along? That's always good topics to bring up. And of course, last but not least is the third story, where Micron technology has been impacted by the geopolitical tension. China bans it. So what's going to happen next? If you have invested in Micron technology, this is a good saucy one. If you're in the chip business between and have stocks in China, maybe Samsung, the US as well, this will be a good one for you to listen to. So let's get to it. Hey coconuts, welcome back to another weekly market updates with me, Rakesh.
And Anthony, we are nearly at the end of May, right? Where's
Yes.
time gone, man?
I know,
This is
dude.
insane.
Actually, I was just about to say we're almost halfway through the year. What
No,
the
there's still the month of June.
I
There's
mean,
still the month.
okay, fine. Then I'll save that for 1st of July.
Yes.
No, but I mean, the year has been passing by quite a fair bit, right?
Yeah, it has. Like, I thought we were still kind of like in March, April. Oh yeah, quarter just ended, doing okay. But no, we are in end May. Actually, I can't even say it's early May. It's end May. It's
No.
terrible. I don't know where the time has gone.
Yeah, bro. Tell me about it. It's probably working lah. I can see we're all working quite hard here. You barely having any sleep.
I don't know if my eye bag show. It's a bit shadowy. But yes, new recording location today at the office. Hope it works, and hope there's no confidential information behind me that I get called out for.
All right, coconuts, as Anthony moves over that papers so that we can't record any of his legal documents, let me take you through what we're going to be talking about today. First things first, we're going to be talking about SEA, and their earnings, Grab and their earnings, and last but not least, China and Micron technology. Well, that one's something to wait for, I think.
Yeah, I think that's the interesting one, right? Like, Grab. Who really cares?
Yeah, I know. See, if you notice even my tone, right, as I was going through it, like, okay, we'll go through this. No, but C is interesting, right? Because I think for coconuts out there, Singaporeans, they always want to know how Shopee's doing, how Garena's doing. We've been covering this story as well for a good year
I think
plus.
we kind of have to do by now. If there's a quarter that goes by without us talking about C, that's a bit weird.
Absolutely. And then Grab, we yelled about it and complained about it from its spec days right down.
Yeah. Okay lah. I mean, they want to earn money from my taxi. I guess it's fine. I don't know if they're making money though. I guess we'll figure out.
No, they're not making. But yes. Okay,
Yes.
let's start off with C. Now, I think one thing to note with C is that, and most of us know this, they have two different kinds, right? One is the e-commerce, the other is the gaming industry for Garena. But reported revenue was actually 3 billion. So it's actually up 5%. But their stock declined 20%.
All right.
20%.
Time to buy.
Right?
Just buy the dip. Doesn't matter.
Very funny. Okay. Buy the dip. Keep going. And it's actually because of this. Number one, their digital entertainment sector actually tanked 52% year on year. That is quite a big thing. I mean, Garena has been having these issues, right? And I think we've been talking about that for quite a bit in terms of that one game that they have in Garena. What's it called, Anthony?
Free Fire.
Yeah. Okay. Yes, that one game that Garena has been holding on. And that's, I think, one of the issues with that. And we've been talking about it. But it's been tanking since the COVID days, right? Because in COVID, everybody was at home playing. And now people have started to go out. And you can actually see a little bit of a change with their e-commerce, right? And now we've seen with Amazon, they've been looking at diversifying and actually looking quite good as we did the earnings a couple of weeks ago in terms of diversification into e-commerce. Well, not shockingly, C also has had quite a good quarter with regards to the e-commerce segment. Their revenue actually climbed 50% year on year.
Okay.
So that is one of the good highlights coming in from C. But of course, the reason it dropped was because the per share profit missed the estimates of 40 cents. And correct me if I'm wrong for this one, Anthony. One of the rumors is that there is some sort of an impairment charge that they had to pay for of 118 million. I was reading this in a couple of articles. It was an undisclosed acquisition for a prior undisclosed acquisition. That was something that we read.
Okay.
And by
That
we, I
sounds a
mean
bit
me.
dodgy, right? Like in the sense that if it was a big acquisition, then clearly should have been material and therefore disclosed. And if it was not a big
Yep.
acquisition, then why are we impairing such a 1.8 billion? Is it? It's
Sorry,
not
no,
an
not
insignificant
billion.
amount.
118 million. 118 million.
Oh, 118
It's
million.
still not
Okay, I
insignificant.
mean
Yes. Yeah.
it's still not insignificant, but okay, like, it's not that big. So maybe they found something
Compared to
to
the
say that I don't
3B.
need to
Yeah.
disclose it. Yeah, I mean that's still
Mm.
4% of revenue, so it's not small either. But yeah,
Yeah.
I think
Yeah. Exactly.
it sounds a bit odd. Without digging. And I think something to dig a bit more of, right? Because I mean, a lot of these long term plays, you are really trying to see how management behaves and whether management behaves in a manner that's aligned with you. So if they are
Mm.
making big acquisitions, writing them down, quite shortly after, and not disclosing about it until you do the write down, then that's a bit odd, right? Like how many more acquisitions are there
Yeah.
inside that have not been disclosed?
And I think maybe it's partly why this is a confidence factor. I mean, Anthony, give us your thoughts here, right? Two different angles. One is the e-commerce, one is the gaming. We know you've been investing in C for quite a while. How does this sort of make you in terms of this undisclosed acquisition, or in terms of Garena, or in terms of e-commerce?
I did it. Half joking, right? Half joking. Not even wholly joking. And I mean, I say this for a few things, right? One is that, last quarter and like 6 months ago, they said, we are going to really focus on profitability now, right? Last quarter
Mm.
was the first time I think they were on a non-GAAP basis, had positive EBITDA, right? So not super profitable. Obviously, there's issues with stock-based comp and all that, but hey, not too bad, right? They within a few months they really bucked up, and you read the news, it's all this very draconian measures of, oh, my toilet paper is now 1 ply, not 2 ply. So I save money. That kind of stuff, right? And I think last
Yes.
quarter when we were talking about earnings, it was also a bit like we want to wait and see, because a lot of the profitability was driven by cost cutting measures. So it was like firing people, it was reduction in
Yep.
sales and marketing, which could, in the medium term lead to a decline in revenues for e-commerce as you stop giving people vouchers to make them use your platform. So to me, this quarter is kind of a step in the correct direction, right? Like the previous story of C was, well, it's a flywheel. We have Garena that will sponsor everything else
Mm.
to lose money, and they'll still be profitable in the end as they burn and gain market share. Right now, we are kind of seeing a maturing of the e-commerce business, and a bit more of a maturing of the C money business as well. So if Garena kind of dies off in the end, that's okay, because you still like the price here is obviously e-commerce and financial services, right? The price is not gaming. Gaming is like an
Yeah.
add-on. It's a nice booster, but if it doesn't happen, it doesn't happen. So no,
It
I
doesn't
think,
happen.
yeah, this is not a bad thing. And even on the gaming side, there's, I think, some good news about they have more games coming down the pipeline. They are AAA. They are meant to be, replacements to Free Flyer and good money spinners. So you never know. There could be a rebound for that right around the corner, right? But I mean, if you just look at the core business and if you think about CS kind of e-commerce, Southeast Asian e-commerce leader, and you want that story, then hey, you know what? The business is doing well. Might be time to start buying again.
Mm. So my take on this is the fact that last year we were talking about how Garena was pulling all of it, and it's really interesting to see how companies have changed. We talked about this with Amazon as well, right? With AWS, and I brought this out right at the start, where their e-commerce business has been the ones actually performing over the last quarter, year on year, and so on and so forth. So are we starting to see C as less of a Garena? Are we starting to see C as more of an e-commerce player? Right? I think that's a question that coconuts you would have to think about. At least that's what I'm thinking about, right? And if that is the case, that's fine, because e-commerce is growing, etc., etc. But then why are you spending more and more on video games? I guess that would be a
Are
question
they
I
spending
have.
more and more on video games, or is it just a revenue thing,
Well,
right? And I think that there's also two parts to that. One is, ideally they get a flywheel back up and running, right? So you can be, a profitable
mm,
gaming business and a profitable e-commerce business, right? The problem with that is that the gaming business is, famously lumpy, right? If you have a hit game, you win a lot. If you don't have a hit game, then you kind of
mm,
struggle. So maybe in the medium term, it might be a reversal of the flywheel, right? Where you have your Shopee and
I get
your,
what you mean.
C money kind of half subsidizing Garena, which seems to be the case now, right? Your e-commerce growth is
Yeah.
great, even with less sales and marketing. Your C money growth is great, So yeah, maybe for now the flywheel is paused or reversing, but if they can get it firing on all cylinders again, hey, that is actually the bullest of bull cases, right? That every part of the company is making money. They
think
have been extremely cutthroat throughout anyway. So if Garena can't turn it around within the next 1 to 2 years, hey, you know what? They really might be closed down as everything gets more profitable. So hey, you never know.
stole the words out of my mouth,
Yeah.
actually, Anthony, because I was just about to say, because they have been pretty cutthroat with regards to all the other Shoppies and all the other markets that they tried to open up and then consolidated back real quick, right? Was it with France? Was it with India? Was it with a few others as well? So
Yep.
maybe they're giving this one more shot with Garena, with the gaming, and then see how that goes. If not, coming back to basics.
Yeah, exactly.
So what? So you really think
Refocusing.
buy the dip, huh? Actually, on that note, Anthony, did you know actually C is up 44% year to date? So actually, that's pretty decent.
It's been great. I mean, it's
Well,
no
you should know this,
Nvidia,
lah.
which is up like what, 120%
Yeah.
for the year. But it's pretty decent. I know this because my C position is actually, I think, profitable now after holding for like a year plus and buying like periodically.
Okay.
No, so yeah, I mean, look, and this kind of just is the nature of things, right? You want to buy. I mean, I still think there's a bear market rally and all that, but you kind of want to buy when the going gets tough, when it gets a bit harder to buy, and not everybody's as optimistic, because when the market recovers and if the company is a good one, that is when you recover and your portfolio recovers.
Yeah, fair enough. Awesome. Well, that's it on C. Let's move on to our next story. Now,
Right.
this one, how market recovering or not? Grab.
No, I never bought, so
Okay.
I
Okay.
still don't know how to think about Grab.
Oh man, even doing the notes for this, I was like, you are in a lot of things. Your hands are in a lot of things. What are you going to be doing? And for me, that's really the question, right? Like, they have a whole ton of things. They have the mobility segment, they have the financial services segment, and I think those are the big ones, right? And one thing that on this notes as well, I just focus on the financial services and the mobility as well. So why don't we start there, right? Mobility, which includes your ride hailing, so on and so forth, that has grown 72% from the first quarter of 2023. So that's decent. Actually, I didn't know they could grow that much. It's quite a
Well,
big,
I mean,
quite a
we
big
were
bit,
kind of still in
actually.
COVID then, were we? Yeah, we were still exiting COVID, right? So
Yeah,
your transport
kind
and all
of,
that wouldn't have been great. I don't know. I actually can't remember what has happened past year.
Yeah. So anyway, it is their excuse here, or not their excuse, but their reason is recovery in tourism, right? And that could be correct, because in 2022, early 2022, we were still trying to book, and we can see flights skyrocketing in prices still. So tourism would have increased in these regions that they are operating in Asia, right? But I think one of the things that they've been focusing on is financial services. And that has grown 233%, which is pretty decent. I think it's 38 million in the first quarter.
Wow, that is
All right.
actually quite
That's
decent. Wait,
quite a
what
bit.
did what was C doing? Because C money should have grown quite a bit as well, right?
C went up 214% year on year. Digital financial services. So that's actually pretty decent that they are equal, or just about the same size as C money as well, and they have been growing. So they're clearly not eating each other's revenue here and there.
Like the
But I
market
think
is just
one of
so
the
big,
things,
they can both grow at
yes,
insane rates.
yes,
Right?
exactly right. But one of the things I thought was pretty cool was that some things that they have mentioned during the earnings call, Grab, they've tried to focus on effectively not spending as much money on the bottom line. What do I mean by this?
Did they
Their
change their toilet
incentives,
paper?
their partner, no, no. But after this digressing, one of the things I thought was quite interesting from Grab was the fact that they have reduced their partner incentives, they've reduced the consumer incentive. So the offers, all of this extra bonus
So
that
they
you
want to
would
grab the
use to
money
go
lah.
in and correct lah. I mean, obviously that's the way. That's the only way, right? That's where they're burning, right?
Yeah.
So that's what has happened.
That's where they were burning.
Yes, absolutely. That's where they were burning. It dropped by 22% for the partner incentives and 36% by consumer incentives. And their gross merchandising value was just 4% of a decline from previous year. So actually, that's not too bad, given that they have reduced the consumer incentives by that much.
Well, I mean, sure, but then you look at C and they slashed, marketing, which is
Toilet
consumer
paper.
incentives by like 60%, right?
Yeah.
I mean, not only toilet paper, but even like Shopee vouchers, for example, and they still grew. So I think that there is maybe something to be said about the structural difference in the markets for Grab's mobility and C's e-commerce business. Like one just seems to work kind of better than the other without incentives. Maybe it's a competition thing, where C is kind of like a duopoly, or at the very least like quite oligopolistic market. Whereas for Grab, there are still quite a lot of competitors that really just differentiate on price, right? Because I don't really care whether I take Tada or Grab or Gojek or Comfort. They all get me the same place. I just want it fast and I want it cheap.
Yes, absolutely. And I think that's exactly right. We're looking at two different segments. Right? One is in the gig economy, one's traveling, one's logistical. The other one is buying from, lack of a better term, buying from China. So it's cheaper as well. So they could buy from there and then send it across. But I think it's nice. It's good to see them reduce these incentives, not as a user, obviously, for us. But let's see how this goes with regards to whether it's sustainable. Because I don't know if it is, because if they notice
and
this,
even if it's
how's the competition going to take it?
And even if it's sustainable, are they actually going to be get profitable, right? So I mean, for all the improvements they are making, they are not EBITDA positive, right? On a GAAP basis. I mean, adjusted. Yeah, sure. Once you take off everything.
Adjusted.
Oh wait, actually no. Even
Yes.
adjusted, they're still negative. Like 200, they're still burning what,
Adjusted
200 mil
EBITDA,
a year.
yes.
So
Yep.
like this is cost cutting, and they are still quite far in the red. How much more can they improve, right? How can they really improve their take rate by that much? Can they really grow the market by that much? I think these are all questions that are difficult to answer. At least difficult to answer positively, to say that yes, they can definitely do it. So I think that is really the challenge.
I mean, they are
that-
saying
that's
they
facing
can,
Grab.
right? They are saying they can.
When?
But I really don't know how much more they're going to go, unless they're going to move into different markets, right? And other markets that they're not into. And even then,
But then that requires
the
cash burn
consumer
as well
incentives
to
are going to be
you know.
there. Exactly. I was just about to say that. That requires partner incentives, that requires consumer incentives. So what are we going to be talking about here with regards to profitability?
Yeah. So I think
For me,
that's going to be very
that's the
difficult,
biggest
I
question.
think. Like you can't grow,
They
you
say they can
can't
do it.
shrink. Sure. Show me, right? Sure, don't tell. So
I mean,
yeah,
they've been
maybe
saying
next
for
quarter
quite
we'll
a
talk
while.
about Grab again.
I think one quarter not enough for this. I think we need to come back in 2 to 3 quarters and then compare and see, okay, things actually change or not.
Maybe we will only
Quarter too
cover
soon.
Grab again when they are free cash flow positive. Okay. Other than that, we will not talk about this company. So we'll not talk about it for a few
Okay,
years. But
so
yes.
coconuts, we won't be talking about it ever again. So
No, they will become
Oh,
free
man.
cash flow positive on an adjusted basis sometime in the next few years, I would say. It's not a
Okay.
bad
Oh, you're
business.
talking about
I mean,
adjusted
Uber
basis.
did it.
Yeah, okay, fine.
Yeah, Uber did it. So I mean, I don't see why Grab can't on a much smaller scale, right? So yeah, it's maybe doable. But yeah, why don't we do this, right? We will not talk about Grab until they are free cash flow positive, and then we'll finally give them some attention.
Okay, fine. Let's give give them attention. Actually, Anthony, if you're hearing us, you can pay us. We will do it for you more often also.
Oh yeah. I mean, if you sponsor us, we'll talk about you all the time. Maybe
Yeah,
not
of
always positively,
course.
because we want to be true to our audience. But yes, we can talk about you as much as you want, or as little as you want. Maybe you don't want us to talk about you, right? You pay us to shut up. I also don't mind.
Oh, that's a great one. Yeah. I think that's a great one. All right. That's a bit for Grab. Anthony, any closing comments? If not, let's move on.
No, I think I'm just very upset about the lack of consumer incentives in their words, right? I just want my cheap delivery and cheap transport. Then I have to take MRT, I have to cook more. Inflation very expensive, Like can they spare a thought for their consumers and just give us more money?
Is that why you're in the office, so you can eat the office pantry? No need to have dinner on it.
No. That's why I'm in the office, so I can claim my taxi fare home and not actually pay for it.
There
myself.
you go.
No. I'm kidding. I'm in the office because I actually have work to do.
Okay, got you. All right, folks. Before moving into any other issues, let's go to our third story.
All right, China.
All right,
and
microtechnology. What's up?
Yeah, I mean, Micron Technology is pretty much memory. Yeah, they're a memory chip manufacturer. They're one of the world's biggest chip companies, and they're somebody that we have kind of been down on quite a bit, because their memory, we think, I think at least, is commoditized, and they have a huge Chinese presence. But because it's commoditized, the Chinese are very strong competitors in this space. And the Koreans with Samsung and SK Hynix are the leaders in this space, right? So Micron by itself, in just from a competitive positioning, wasn't great already, right? Then, the news struck, I think, on Sunday, the companies were told, and it became like news on Monday that the Chinese Cyberspace Administration released a ruling. They found that Micron's products pose security risks to their information infrastructure. So Chinese companies, especially those who are operators of key infrastructure, cannot buy Micron products. Then obviously the question is, well, what's key infrastructure? Nobody really knows. At the very least, they're like your telcos, your banks, like if a bank, you have a data center, because you want it on-prem, sorry, no Micron chips can go in there.
Wow. Wow. Clearly this is a bit more than just Micron now, right? Aren't they the scapegoat? What's
Yeah,
happening
I
here?
mean, I think clearly it's tit for tat, right? We have talked quite a bit about the US kind of, well, not sanctions, the US actions against Chinese chip companies, and preventing them from buying materials, and preventing them from buying equipment, and preventing Nvidia and AMD from exporting to China, right? So that's obviously hurt China, and China have just come out swinging and said, well, fine, screw you, I'm going to hurt your US company too. And unfortunately, this kind of seems to be the best that they can do without cutting off their own nose. So that's a bit of a shame. But yeah, I think this is clearly retaliation. They're trying to push the US companies a bit more to say, hey, you know what? If you keep harming us, we will push back. We will try to harm you. And so if you don't want this to happen to you, go talk to your government, right? Because from the Chinese perspective, at least, the US started it. I mean, the US will say, obviously, the Chinese started it. So,
Yeah. Yeah.
they're like kids in the
Of
playground.
course.
But hey, I guess all geopolitics
So
are really just like playground fights.
I mean Micron clearly poor thing lah. Huh? The kid
Mm,
right in the center of the playground with the two bullies on the two
yeah.
corners. But coming back to the numbers, what are the percentages that Micron will lose in terms of this revenue? How big are they in China? How big are they in Hong Kong? Can sell or cannot?
Okay, so the problem is nobody really knows, and nobody really knows on different
Oh,
fronts, right? It's not just one thing that nobody really knows. So one is nobody really knows what equipment and which companies this ruling affects, right? Is it just telcos and banks? Is it more companies, like maybe property developers are now also key infrastructure, right? So you can do that. Or maybe like Alibaba
yeah,
Cloud
yeah.
is key infrastructure, so you can do that. So I think there is a very open question as to who is actually banned. And then there's a separate question of what is actually banned, right? So people think it's like data centers and big things like that. Sure, that's fine. But, Micron also supplies a lot of chips to smartphones. So if you are a bank employee that owns a smartphone, is that an operator of key infrastructure and a vector of attack? So that is banned as well. And the answer is no, nobody knows, right?
Wow.
And in China as well, that there is always a bit of that signaling effect going on. So if the Chinese government has told all the big SOEs that you can't use Micron, you can't have Micron products in your usage, then if you are Alibaba, you're not going to follow that. That's a bit challenging, right? Or if you are, a huge private Chinese company, are you not going to follow? Or a huge Hong Kong company, are you not going to follow that? I think that's you want to err on the side of caution, right? You don't want to be the one hauled up next in 3 months for not doing all these things. So you might, out of an abundance of caution, just say, actually, you know what? I don't think this applies to me, but just to be safe, I'm not buying Micron products as well, right? So I think that
Wow.
is all. Those are
And
all
if that
unknowns, but
yeah,
that
and if
is
that
obviously the super pessimistic view.
yeah, so if that cascades down to that sort of thinking, and you can see why as well, given what the Chinese government has been doing, and how they can just ban you and do whatever they want to. As a company, you're going to be very, very cautious, and therefore not buy Micron until this is cleared up. So it's going to be the opposite,
Yeah.
right? Where it's like, oh, it's ambiguous. It's ambiguous. I'll just buy it until they say cannot. In this case, I won't buy it until they say can, right? And that is putting
Yes.
Micron in a completely different step.
Yep. And just in terms of like impact on Micron, right? So if you look at their financials, I think 25% of their revenue is generated either directly or indirectly from Hong Kong and China, right? So a quarter of the company, right, could potentially
25.
be impacted. Worst case, like
Oh my God.
worst case, all of that goes to zero. 25% is gone, right? Management came out and said, "Oh yeah, we don't think it's that bad. We assume this doesn't affect smartphones. It's only on data centers. We assume it's like telcos and banks because that seems to be the hint from the government. So we expect a low to high single digit percentage of hit to revenue. So it's like what, 3 to 9%, I guess. That's their big range that they've offered up. So not 10, still less than 10. But I think that is
Still, guys,
at
it's
least,
material enough.
it's big, right? It's big. No
Yeah.
reason to say it's not big. It's going to be big. So that's one problem for Micron, right? Directly, their revenue is hit. Another problem is, well, they do produce a lot in China that they export out of China to sell to Asia, or to sell to China, Korea, and Japan, right? Is that the next part that's going to be hit, right?
As in,
And I think
cannot
that's
produce in
where
China?
you no, I mean, there's no ruling that they cannot produce in China, right?
Stop
But
selling.
if
Yeah.
if you can't buy, or if they have to stop selling, then is there a problem? If they can't export, is there a problem? Like, if once there is this tit for tat exchange going on, unless somebody being one of the US or the Chinese government, which seems unlikely, steps up to say, hey, you know what, let's call a truce for now. Let's be a bit more friendly. It's just gonna get worse, right? So I would say this is the start and not the end. Even just for Micron, right? This is not the end of sanctions, or possible actions against them. This is just the beginning, and I guess the easiest way that the Chinese could, find some sort of retaliation. And this retaliation sounds very, very similar to what the US did to China, right? Because the US, I think 3 or 4 years ago now, for Huawei said, hey, you know what? Your Huawei products are risk to my security, so I'm banning them from all products. Right. So this is the direct opposite.
Wow. I mean, how many more companies? For me, I'm just thinking this is the first, right?
Yep.
The US can't back down. They're not going to. They might come back and say another company, and then China might say another company, and before you know it, it's not going to work out, right? And all of these companies are effectively right in the center of this fight
Yep.
between China and US.
Exactly. I mean, but this is kind of the natural consequence if you say that I want to move my supply chain out of China, right? Like you are going to end up in a world where you have these two powers, and these two powers will kind of have bifurcated supply chains where they have a list of suppliers that sell primarily to them, and a list of suppliers that don't, right? And you kind of see this battle line already being drawn, especially in semiconductors, with ASML also coming out and saying, "Oh yeah, you know what? The U.S. government have asked us very nicely not to supply to China, and we have decided to follow that." And the U.S. have kind of also got Japan with Nikon on board, and Nikon makes like one of the key, I can't even remember which key component. I was going to say mirrors, but no, that's the German company. So yeah, one of the key components of chips. One of the, and then they have also come out and say, yeah, sure, we'll cut down our supply to China, right? So you kind of see the battle lines being drawn here, where there are sides being chosen by the big suppliers, and that really hurts China.
And I mean, we can move into hypothetical a bit more, but to bring it back down to coconuts, right? What does this mean for micron investors, people who have invested in micron?
Yeah, first question
Cut
is, why do you
loss.
buy, right?
Yeah, but let's just say they did.
Okay, yeah. So but I mean, I mean that's not being wholly flippant, right? Because what was your thesis? What was your thesis? That they would be the winner of the U.S. memory chip supply, because there is a possible world where memory chips commodities as they are split. The two leaders being Samsung and SK Hynix somehow don't fall within the US sphere, right, or the EU sphere. Then in which case Micron becomes a de facto leader. They are going to be able to justify high margins and all that, and they'll win, right? I mean, I don't think that's likely, but yeah, it's not impossible. So if that was your thesis, then this doesn't harm it. In fact, it supports it, and you should hold, or you should buy more on a dip. If your thesis was, you know what, Micron, they're sleeping giant, US manufacturing will win in the end. It's not really a commodity. There are real differences between the chips. So I'm going to support Micron, I'm going to buy. Then I'm sorry, maybe it's time to sell, because your thesis, like, you have just kind of lost at least 10% of your revenue, right? How much stronger do you have to be in terms of market share to gain it all back, outside of China, And this is the start, right? So how much more of a hit can you take? So you can go, oh yeah, sure, and I'm super long term. Long term, they'll win. I don't care what happens in the short term. Then all I can say is good luck, right? That's all there is to it.
But maybe there's a third, right? So they ban microchips, etc. Now there's this gap to fill in China. Who do you think might go in? Right, clearly there's this gap that China needs
Yeah.
to buy these
So
chips.
the
Is there
clear
a
ones
my
are
question here is this, right? Number one, I would love for you to talk about that. But number two, could it be as an investor you buy those, maybe something of that to try and offset this? Two-part question.
yeah. So I think the clear substitutes, and these are really substitutes in the sense that you don't have to change any part of your manufacturing process, right? You literally swap one chip for another, right? They are Samsung and SK
Mm.
Hynix, right? So we have talked about them quite a few
There you
times.
go.
Just in
Yes.
this segment, they are like the top two companies for memory chips, right? So you know, and those two, I think they didn't really shoot up, but they went up a bit, once the announcement came out. And I think the difficulty with these two companies is obviously South Korea is a US ally, right? You can't. I mean, it's possible, but it's really very unlikely that that these companies just align themselves with China and kind of screw the US, right? That's not going to work. So they'll try to tread the middle. They'll try to play both sides, but if push comes to shove,
Play
they'll choose
neutral.
US. So it might be a bit difficult to see how in the medium term they really gain from Micron being excluded. In fact, you might take the opposite view and say, hey, you know what? If Koreans are actually US allies, then these two companies are next on the chopping block, right? From China's perspective, it's time to hurt them as well, and
Yeah.
kind of send a warning to everybody else not to ally with the US, right? So I think that's the difficulty. The alternatives, right, and this really plays into the two supply chain type of thesis is, well, memory is a commodity. We have Yangtze Memory, YMTC, which is a relatively good supplier of memory chips, right? And we talked about them, I think, many months back. But they are definitely good memory companies in China that can produce things like this, right? So there are substitutes within the Chinese market as well, and those companies actually went up a lot on Monday because it was
There you
obviously
go.
a tailwind in their bag.
Okay, cool. Interesting. It's nice to know about this. All right, Coconuts. Thank you again so much for listening. It's just the two of us today, but hopefully we'll get someone in the next couple of weeks. We'll see you all next week. Bye.
All right, see you. Bye.
Thanks for tuning in to this week's episode with me, Rakesh, and trust that you learned something today. If you enjoyed the session and want to be part of the banter, join our community Telegram group or follow us on social media. We also have a weekly newsletter to get a digest of the news we covered. To sign up, please click the description below. As always, we love your feedback, so share that with us at hello@thefinancialcoconut.com. Thanks, and stay safe.